Hey guys, welcome to another edition of the Trade Genius Podcast. Bob and Phil here, and got a good one for you today, guys. Bob's going to tell you why now is not the time to be doing certain types of very large purchases. So please stay tuned for what he has to say. You're not going to want to miss it.
Trade Genius.
All right, Bob, I see these articles that you've prepared, and let's just say you may not want to go home shopping right now, huh?
You may not. You may not want to go home shopping for the next 10 years, Phil.
Really?
Yeah. So here's the thing that people aren't getting about this housing. They're trying to compare it to 2008. I have a slide showing you somebody trying to rationalize this, but this is an entirely different market. And really, what's happening here is that we have a situation, and we're seeing it in the stock market too. It's a liquidity problem for real estate. So you get to a point where there's so few, in this point, buyers of housing that sales have fallen off a cliff. And nothing in the macro area is telling us that it's going to get better anytime soon. And so what I look for into what I call the sweet spot of supply and demand. And we're nowhere near that. And that's falling away over time because the affordability index is not getting any better and the demographics are getting worse. And I think that's a recipe for, I'm almost willing to say that we will not see what I would call peak average pricing in housing on a national average again in my lifetime. And
Wow.
I'm hoping to live for at least another 20 years.
Wow.
Yeah. So why don't we flip through and talk about this? And Redfin's already saying, it's this big problem, okay? And housing. What's going to happen here is you're going to start seeing the new construction market collapse because right now the only people buying these homes are investors, and investors are now getting choked to death on inventory that they can't monetize because of. When you have a 5% cap rate, right? Not cap rate, Fed funds rate, your cap rate has to exceed that, or why would you buy real estate? You've got to stick it in T-bills, right? You're going to make a lot more money with no risk.
Right.
And once that happens, you're going to see these builders start to really struggle and suffer. And then that's the downstream effect that'll affect the economy going forward. But that's a podcast for a different day. So let's flip on to the next slide here. Because there is a stock opportunity, and we keep pounding the table on this stock. But this is another thing on Airbnb. Okay, there's going to be a catastrophic availability of this inventory, and people are not going to be making any money in Airbnb products. As we slip into a recession, and this is probably on the real estate side. This is my number one short opportunity for 2023. Buy puts on this thing every time it gets overvalued. And here's the rationale that I keep seeing, Phil, that I want to disabuse people of this notion, if you can. We'll put that in there with irregardless. If you can flip this next
It's not a word, Bob.
It is. Yeah, actually, it is a word per Webster, but our commentators don't care. They'd just rather troll us. So if we can flip to this house price crashing thing, this is what's going to fool people. See, remember, you could torture the data to tell you anything you want to see. They're trying to basically tell us here that, things are better economically today than they were in 2008 for the housing market, okay? What they don't tell you is that they should have rolled this thing back to 2006 is really when the housing market was peaking out, number one. And number two is that it's so obnoxiously overvalued that I don't care if the economy never gets worse. Your affordability index is going to keep you from buying it, number one. And number two, demographics are going to keep the supply rising ahead of demand. And that's just ultimately drive the price down. And that comes to my next slide I want to show people. Okay. Look, the model's flipping here. We have more adults than kids. Okay.
Right.
Those are the ones that buy our homes, fellas and ladies. Okay. In the next 20 years, these are the home buyers. Okay. Now, I have one birthing out of mom and dad's home into their own world, and I just can't see without mom and dad's help them ever being able to afford a home here in Southern California at current prices. So I always tell my daughter is that, look, just in the next 10 years, you're going to be able to afford a house. Daddy and mommy just are not going to be happy with the price of their home. And unless we have some really, really incredible wage inflation, that keeps, and with interest rates not going up to match, then we're not going to be able to bridge this affordability gap until a lot of inventory comes on. And this is what I'm talking about here with the demographics. And the next slide should really blow you away. All right, this is the population. One slide we didn't put in there because we just didn't want to keep just giving you charts of chart. But the U.S. population is basically stagnated. In fact, U.S. population would have fallen this year if it wasn't for the sheer number of people pouring across our southern border with tacit approval. I would imagine on both the Republicans and the Democrats. Okay, because you can't keep a debt Ponzi scheme going with a smaller population. Okay, and so we basically stagnated out. The United States has basically a peak population right now. Okay, I think we grew 300,000 people. Okay, and how many people came across the border? Over 1 million, maybe two. So what they're saying is that there's no market, there's no new people. It's kind of like a wheel. You have to have, people buying the least expensive homes and rolling up to the more expensive homes. And here's the other thing that people don't get: the three states with the most expensive real estate in the United States are losing population. Right? You're looking at New York, you're looking at Illinois, you're looking at California, all losing population. And it's all flowing to Texas and Florida and the Southeast. Even Arizona is not growing like it has. So we're seeing big demographic shifts where the biggest growth in real estate is, and that is bad news for those states and their tax revenue bases. And I live in California. I think it's going to be we're already flipping into deficit. 30% of our GDP or more is real estate related. So this thing has some downstream effects that people just are not quite grasping yet. They're looking at 2008 and saying, hey, we're going to V-bottom this thing and we're going to come right back because real estate always comes back up. Well, we've never, ever gone through a baby boom leaving the mortal coil before either. So, we have that population is rapidly leaving their homes involuntarily. Okay, they're going into assisted living facilities or they're going into a box. And so those homes are going to come on the market, and those homes tend to be the most expensive homes out there. And so you're just basically going to have stagnation. And I think we covered it all. No, this is one that you put out there too, Phil. So why don't you I'll take a break from talking here. Maybe you can talk to people a little bit about this chart.
Yeah, sure. So this is from ReVenture Consulting, and he puts together some really good charts on real estate markets throughout the country. And I like it. They're just clean and they jump right out at you, which is why I like his charts. But this is basically we have consumer sentiment reports that come out for the overall markets. This is essentially consumer sentiment for the housing market, and 79% think it's a bad time to buy a house. And you're never going to have a good real estate market when almost the overwhelming majority doesn't want to buy right now. And I think that's because I think things are slowing. I think the mortgage rates are getting to the point where people are just like, yeah, nah, because your buying power is just eviscerated, right? At 7-8% mortgage rates. So it's starting. I think the Fed's getting what they want out of this so far. And that was something I wanted to touch on earlier. I forgot to mention was that you talk about cap rate, or you can go into a 12-month bond right now, right? And what are you going to get? 4 or 5%? And is your house going to appreciate 4 or 5% if you buy something now? No, it's probably going to depreciate 5%. So the Fed's forcing everyone go long bonds and get out of everything else speculative, and that's how they're going to try to get the demand to implode and to try to get this inflation to cool off. So you have to understand that's kind of the game. And so they're giving you an opportunity to make money. It's just they don't want you speculating. They want a more, let's say, moderated source of income for your investments. And then the other one was the housing bubble chart. And this is basically inflation-adjusted home prices from Case-Shiller's data. Again, ReVenture Consulting put this chart up. But you can see, we're way over the skis here. Even in the 06, I was, in the thick of construction in 06, and it was just gangbusters. You couldn't build fast enough. And then overnight, it was gone. Like, it was literally gone. Now, We were in more of the higher end, luxury part of that segment. And, of course, that's, nobody needs that when things are tight. So that's the first thing to go. But the collapse was swift. And you're starting to see the prices are starting to give you that hook down again. And considering how steep this rise is, I think you do have to look at that 2006 area and as a model for how quickly things can decelerate and depreciate. So, those 12-month T-bills look really good.
Yeah. The other thing I'll add to this too, usually sentiment is an indicator you could fade, but real estate's not stocks. If you get a sentiment reading that's extreme, you could probably say over the next couple of weeks, maybe a month, I can be scaling in and I'm going to be right here because, retail is usually wrong. But real estate, you got to add 12 months to each month, okay? And we haven't even got into the reasons why. Usually you have a recession, that causes some of the pain we're already seeing. And this time it's that's still on the front end of us. And I think we have to go through that. So I'm looking before any kind of bottom. I would say at least 2 to 3 years from a bottom, Phil. And I know people are like saying I'm all wet on this thing, but look how long it took us from the 2006 peak. We didn't bottom till 2014. 2014, guys. Okay, it was 8 years on the 2006 top to 2014 bottom, and it's right there in the chart. So so it's on the chart that Phil just had up a second ago, and then that's 8 years. Can you imagine if even a bigger bubble, how long it's going to take? That's why I joke and say, hey, my lifetime, it's going to be probably maybe even 10 years before we bottom out on this thing because, you have demographics aren't your friend. Unless we start importing rich people from around the world that can come in and buy houses, the demand's just simply not going to be there. Well, the demand's going to be there, but it's mispriced.
Yeah, I mean, like you said, right, about 2000, so as we went into 2007, things started to roll over, basically our equivalent of 2021. And then we didn't bottom until somewhere between 2013 and 2014. So that's six plus years of declining home prices.
Yeah, scary.
It is. And I will say this, if you're in an area where the inventory is tight, I'm not talking like Vegas, like just areas or smaller communities where inventory is tight, you'll probably bottom sooner and bounce sooner. But where this plays out with these multi-year drawdowns will be large markets like you have in Las Vegas, in Texas, in like Austin, Texas, like those larger markets that are going to have an inventory glut. I mean, it's even over in Honolulu, even, because just there's a large amount of inventory. Any situation like that, you're going to see probably the prolonged drawdown, and they'll be the last ones to bottom.
Yeah, and the other thing I'll say is if you're looking to buy a home, you got to kind of game theory this a little bit. Just say, okay, over the next 3 years, I'm going to pick the area where I want to live, and I'm going to save like a madman to be able to afford the down payment and put myself in a position. Because you kind of know where you want to move, right? So, if I'm a young family and you have, basically the ability to move your job where you can, is that, I'd be thinking Southeast United States or Intermountain United States, right? I'm not a big Texas person, but, there's still probably a lot of room in Texas, except for certain urban areas. But, over the next 3 years, if prices come down, look, prices can come down up to 60% from peak to trough, okay? And probably in the more desirable areas, we're gonna make a lower low than 2008 on housing, okay? That's where you have to be starting to target, and you need to put yourself in a position where you can buy a home then. And then you're probably going to want to do is buy a home then and have a variable rate mortgage because you're going to probably be able to refinance it 3 or 4 times as they drive this thing back to 0 interest rates. So that's the good guy coming out of it. But, you're looking years here before, somebody jumping in here to try to grab a home. I think you're going to be sadly disappointed, and you're going to be stuck with a very, very illiquid asset.
Well, guys, I hope that is eye-opening for you. I think if you've been following our videos, we've shown you various different macro things that ties into this and where we're going to have an uphill battle, especially in housing. But the macro is not helping us either. So we'd love to hear your thoughts on this. Where do you guys think would be a good market to buy the dip in? Where are you currently looking at, or are you currently looking at maybe selling here and buying back in lower? Give us your thoughts below. Otherwise, please hit like and subscribe. It really helps out our channel, and we will see you on the next episode. Take care, guys.
Trade Genius.